Hello, good evening, everyone, and welcome to the market kind of overview. I'm just going to quickly send in links from YouTube, and we'll get started after that. So just bear with me a couple of minutes while I get the links, and then I can tell if it wants to. Welcome, everyone. Just give me a couple of minutes so I can say that I am live. So 2 seconds. Everyone. Oh, 2 secs. I am not very good at doing these sort of things like sharing things. So let me just go on the YouTube and we'll get started in a minute. Darwinex. There we go. There's the live session. Copy and paste. All right. Let me just close that down. Okay, that should be links shared. Yeah, welcome everyone. You've only got me today, so what I'm going to go over is we're just going to have a little bit of a market overview just for 5 minutes. I mean, I am not the person that is the best at kind of looking at markets and dictating. You know, my sort of background is obviously quantitative trading or algo trading, so I'm not really too bothered as to kind of what way the market goes. But we can have a quick look because we do have some movement today. I mean, I'm going to go over the assets that I kind of trade anyway. One of them being dollar yen. So we can see that we've kind of had a little bit of a pullback, which I'm currently long at the moment. So hopefully we get a continuation of that. But yeah, good to see some movement today. That was a loss yesterday. So yeah, good to see that we've got some momentum today. It sounds quite bad, but I don't really look at the markets like that much. I just get notifications whenever I get in a trade, and I make sure the trade's correct, and that's pretty much it. How we doing? How we doing? Welcome, welcome. So yeah, I don't really look at the markets that much. Like we're speaking a couple of times a day. But yeah, I've got some good movement in oil. Apart from that, gold's moving, German DAX is moving in the right direction, which is fine for anyone's for indices. Gold, fine. Nasdaq, fine. Uh, silver, yeah. I mean, I'm not going to go over the market too much. I'm going to probably go back on to what we were developing yesterday, which was a strategy. And basically, if I can bring it up, if we can go to this, yeah. So this is what we built yesterday in yesterday's sort of like live session, and simply it is a breakout of the high or the low of the past 30 bars, and then the ADX value is sort of below whatever the threshold was, which was 40. So when the 15 period is below 40, we're then looking for buys and sells. And we did get like positive results on gold. So what I've done is today I've kind of went back over it and applied an ATR sort of stop loss to it just to see what sort of results that we get. And we can see that I've done a 1 hour ATR. So we're using the 1 hour ATR and we're using multiples of it. So what I mean is one times the 1 hour ATR, two times the 2 hour ATR, 2.5 times the 2 hour ATR, and so on, all the way up to four. And what I wanted to see was that it worked across like a wide range of sort of like multipliers. So 2.5 being the best, 2 being the second best, 1 being like the sort of like third best. But what's quite good to see is, between that 1.5 and the 3.5, there's not like a massive difference in results. I think in last night, I wonder how many people have copied strategies online as their own. Yeah, I mean, to be honest, Rob, there's probably heaps of it. Like, I don't take any ownership of this strategy. I might trade a version of it, but taking ownership, yeah. I think the thing is, like, there's like most people are just reinventing. They're not reinventing the wheel. They've just got their own sort of little different differentials that they'll maybe apply. But a lot of strategies are very same and basic. So, for instance, like breakouts, if you're taking a bar breakout, there's so many different versions of that you could trade and make it your own, but the actual underlying strategy is not your own. I mean, most people that invented these things are hundreds and hundreds of years ago for some of these simple things that in the trend following days back in the really, if you do some research and read some books even from early, over 100 years ago, you still get trend following breakouts. It's the philosophy has never really changed in a lot of cases, but the way that we trade them does. So obviously we can change the sort of filtration, or there's so many things that you can change to the specific market. But go back to this. I'm really happy with the range of results. We've got that's 47% return with an 8.72% drawdown. Now, if that was just your return over the past like 8 years, yeah, it's not the best return to drawdown, but we're trying to think of it this way. We're gonna put this into a portfolio of different sort of assets, and together they'll work really well. So we're not going to cherry pick the best result, but what we're going to do is we can see between the 2 and the 2.5 sort of multiplier. We're going to sort of like filter between that range. So we'll pick something like, we'll pick right in the middle and we'll pick 2.25 just for this case. And then 2.25. What we're going to do next is I'm going to sort of like, so this is just, these results are on a one-to-one basis. So risking 1% to make 1%, one-to-ones. So to get these sort of results on a one-to-ones and a breakout is really good and very promising. So we're going to see how far we can push the stop loss. So sometimes like systems can be short-term breakouts. Sometimes, I know in the past 2 years of gold, you could have took a breakout and held it for multiple days, and it's kept on going in the right direction. So I'm just going to do it basically. We're going to test, let's start 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5. And we can take it from there. So I'm going to run that optimization. Hopefully it doesn't take too long. Before, the reason I run the test before, like as you've seen it there, is just so then you're not waiting too long the sort of stream. And it goes back to the end of yesterday. I said I was going to try ATR, tried percentage of price. Percentage of price worked, but didn't give us the best range. We can see the ATR results are slightly better over a bigger range. So that's really good to see. So we'll just wait for that. I don't know how long it will be, but we're going to go back into FX Streamer while that happens, and we're going to think of, if that wants to let me go to my project where I've got management. So I need to try find it. I've got too many. I need to sort this out. All right. Okay. So I didn't actually create this myself. I got this off someone probably 3 years ago, and all it is different sort of management styles that you can. I can probably share this file within Discord because there's no secrets. It gives you different options for sort of different ways of management, and you can play about with them. But at least you've got, what's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got like 12, 11 or 11 and between 11 and 13. I didn't really count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 different types of management styles that you could test essentially. Some are similar, some are very different, but it's always good to sort of test that. And I normally just go through them one by one. I'm not the biggest fan of like stop loss, like last candle period levels for like it's sort of like a Fibonacci retracement stop loss. Never really tried that. Never found it too great with breakouts, but sometimes it can work. Choppy week for indices, except FTSE. Yeah, let's have a quick look at that. Oh, my bad. Right. Uh, let's have a look at Nasdaq. So when did Monday start? Yeah, pretty choppy. Starting to see some momentum though. We're starting to see a little bit of a breakout of the whole consolidation of yesterday as well as like looking into today. Yeah, same again with the S&P. We're starting to move away. I've not actually looked at the FTSE. Where is the FTSE? Damn. Yeah, okay. The FTSE's been a pretty clean trend, and so do you know what? It's something that I've never traded. Like I've never traded the FTSE before. Like I've started doing some testing on a few things, just on a manual basis, and it's I can't even remember what I would need to go back to my Notion document to see what I was testing. But it's simply going to be like a waiting for a pullback and then a breakout after a sort of pullback's happened. I can't remember testing this though. That must have been, yeah, that must have been like at the end of Christmas time last year that I was testing this. I would need to look at what I was testing because I do some manual testing just occasionally when, let's say it's the weekend and I'm testing something. You know, I might pull up Trading View just to kind of manually sort of brainstorm as well. But most most of the ideas that I do from manual testing never come into like into the environment of me testing it because most of the time uh, some of my manual ideas are just not the best, and I think that's just the thing. Like you're never always going to have a group. Like you could have a good idea, test it, and then it doesn't like actually do too well. But yeah, going back to the topic, it's good to see that the FTSE's moving. At least something's moving. I think I did mention the DAX is starting to move as well. So kind of had yeah, the DAX is kind of moving quite well. I've had that kind of fake out of like the low of what Friday into pushing up higher. So yeah, interesting to see where indices go this week. I think we've got some news coming up for the dollars at the speech. FOMC minutes. Okay, okay. So that's not till like 8 o'clock. So it's another 3 hours away. We'll see what that happens. I'm hoping that it just pushes dollar yen higher, so then it means I can capitalize on it. But yeah, let me just pull back up FX Dreamer. It was this one. So yeah, we're gonna depending on what the sort of targets we get in terms of results will depend on what sort of option of management I go. One of my favorite ones is using turtle management, and that's just going based on the famous turtle traders, the Richard Dennis. I think it's Richard Dennis. Really bad at remembering names. Taught all these people. So literally, all you're doing is trailing the low as price moves higher. You can actually do a very good scaling in system with like using turtle theory, but that's definitely for another day and a bit more. Um, Still not buying this market momentum. You've got nice trades plotted. Yeah, trades plotted is the key. None of them are none of them have been actual real trades. It's just testing in terms of like it's like a pullback then a breakout. So because everything because I've been doing breakouts for so long, it's kind of just my bread and butter. So I'll always sort of look for like I know what is good areas to have breakouts at. The problem is like if it's a choppy market, it doesn't matter if you've got good areas of breakouts, you're going to get chopped. So what I try and do is look for a trending asset, which indices tend to be, but it depends on like I'm more based on like intraday or my whole time's not very long, so it's something I've always kind of stayed clear of. But I think that was just an old mentality of mine, like always just kind of happily being in and out, never really happy holding for that long term. But I've been testing a few things on like Nasdaq, S&P, and definitely like holding for longer periods of time if you've got a good entry is definitely beneficial. Obviously, the theory of buying, set and forget with indices is obviously driven behind it, and obviously a lot more volume coming into the markets over the past 5, 6 years, especially into indices, has definitely helped the sort of trends be a little bit more volatile as well. So something that I'm looking into. But let's have a look to see. Okay, we're actually still nowhere near it. So sometimes with MetaTrader, it just definitely takes a little bit of time because I live in the middle of nowhere. My connection's never 100% at times as well. Like it's fine for trading, it's fine for analysis. It's just sometimes a bit slow whenever I've done a live stream. I found. So yeah, let's have a quick look back over some of these things. So this management here is very basic. So when we're at 1 to 2, we're moving the stop loss. Like when we're at 2 hour, we're moving the stop loss to 1 hour, and then we're just going to let the rest of the trade play. So it can be it's one of those ones where you either get a small win, small loss, or a big win. It's whereas some of these ones it can be complete mixed bag of what you get. So like turtle management, you could have tiny wins. As it trails, you don't know what you're going to get. It's really good for sort of win rate sort of strategies. So like it does increase your win rate if you have like a tight trailing stop naturally. But it only trails when you're in profit, which is what I kind of like about it. It's not one of these ones where it's instantly trailing as soon as you've moved like 1 pip. I'm not the biggest fan of those sort of managements. Never really found anything that works to allow sort of to catch the overall trend, which is what I like to do in the intraday. So yeah, it's a very good one. Potentially good strat. Opening pending orders at prior high if the high was above the upper Bollinger Band at the time. Yeah, I mean, I've tested quite a few things with Bollinger Bands, and people always kind of stay away from indicators, but Bollinger Bands, Keltner channels, brilliant things to trade if you can, and build strategies around them. It's one of the proven sort of indicators that I've like used to try and build strategies that time and time again does pretty well from a breakout perspective. So I could potentially build that in a future episode because that'd be good to show. Um, but what my plan is I'm trying to find a strategy that we can actually dive deeper into some sort of optimization, like sort of analysis using Quant Analyzer. So what I want to do is like analyze like a sort of time frame. So are we trading just Asia session, or we're trading just London, or we're trading New York, or are we trading like two different ones and leaving one out? It'd be cool to sort of develop a strategy in front of everyone here to see, okay, in the in sample, Asia session was best, in the out sample, Asia session is best, because that'd be a good thing to show that sometimes it's not over optimizing if you're specifically like trading a specific window, because you got to think as manual traders as well. Like one of the hardest things that I find when I'm manually traded is for my strategy to have a complete edge, I needed to be up every 4 hours. So if that meant setting an alarm every 4 hours, even when if I'm asleep, that's what I used to do, and that's where the edge, like the edge was every 4 hours, like at the bar close of the 4 hour bar, is where my edge was. So I had to be up every 4 hours. But there was strategies that I would specifically only trade sort of first 2 hours of London, and that was more just to catch the momentum of what happened from Asia into what happens in London. So yeah, sometimes like trading specific time windows are really good for strategies, depending on the asset, of course. So one thing that I found, which is pretty obvious to some people, but might not be to others, but some of the strategies on the breakouts of the Nasdaq are just really good in the first 3 hours of New York. Like that's where the momentum's coming in. And normally, what happens at the start, kind of like we've got a high chance we're going to push higher on indices, so we've already got that underlying edge without even placing a trade. That long side's all it's going to go up long term. That is the edge, and that's why long only strategies kind of work on these sort of things. So your edge already exists going long only. It's just how can you extract more or do better than what the Nasdaq does for a drawdown perspective. which over the past like 5, 6 years, like the strategies that I've tested have always looked kind of good on the Nasdaq. But since momentum's kind of slowed up, like the past 3 or 4 months, those strategies have been struggling a bit. So I've put them in like a forward testing environment. I don't want to apply it to my like real like IME, my portfolio, until that I've got like enough data to say, okay, this is even in a more like choppy market still works because we've had some really good years in the Nasdaq as of late. Even since COVID, like, yes, we had that massive down period, but the recovery time was crazy. So if you're trading long only breakout strategies during then, it worked well. It worked really well. Um, so it's something that I'm working on, more indice trading, because most of my strategies are around forex, commodities, because that's what I was trading when I was younger. I was just, to be honest, I was only trading currencies until I become an algorithmic trader, because that's just what I found worked best for me, and it was the easiest entry to market in terms of being able to place trades at a good risk level. So yeah, let's see. Okay, we're almost done here, so this is quite good, and we'll get to see how it is working. So that's going to be 1, 2, 3, 4. Okay, so it's going to do another test after that. But we'll probably just ignore it and we'll just go with whatever we're given, just so then we can move on with this session to what I'm trying to show. But this strategy will already be going on the charity Darwin, which hopefully, if nobody knows here that we're doing, me and Kieran are doing a charity Darwin, which we're going to be building strategies. So strategies that we're building in this live session will be going on the charity Darwin, and all proceeds from the charity Darwin will go to charity. So it's a really good thing to kind of follow. It's really, it's going to be a really good feeling at the end of the year if we can make like good profit and give back to charities. So that'd be really good of us to do. Um, so yeah. Uh, yeah, it just takes too long at times. I think because I run like I've got like a Mac and I run parallels just because so then I've got Quant Analyzer in the same sort of program. Obviously, I'm only being able to run 4 cores, and I think that's definitely why like it's a lot slower. I'm not a computer person. I'm afraid that so I'm probably speaking crap, but someone could probably let me know if that's right or wrong. I'm not too sure. Uh, all right. Okay, that's looking that's looking really promising. All right. So what's that? 156% return with a 15% drawdown. So we're getting into something that's really good. I think we'll just. It's natural to say that with increasing the targets, we're actually getting a lot more profit out of it. But for time's sake, we're just going to say we're going to go with a 1 to 4. Just going to quickly run the test because I want to see what the win rate is and where the drawdowns are naturally happening, so we can have a little check. But so far, so good. That's a pretty good result, and I probably know where most of the returns coming from, and I think all of us do, especially on gold. It's definitely within the last uh, 2 years. So yeah, we'll have a little look into where it actually comes from, but yeah, good to see that even just we just chose within the 2 and the 2.5 ATR. That the 2.25 somewhere in the middle still works and still works pretty well. And if you remember, it was about that 40 odd thousand return. So even at the 1 to 1, it's still returning roughly the same. So it meant anywhere between that 2 and 2.5, it is a decent amount of movement each side. So it's kind of in that middle area that's kind of robust. It's as robust as it can get, essentially, because we've seen that all multipliers were profitable, which is a really good start. That shows you that the edge is really strong because it doesn't matter what stop loss you put, 1, 2, 3, 4, all of them made a return. which is a really good. That is what I want to see before I take it to the next step. If I don't see like I'm not going to be too worried if it doesn't work on a one ATR, but it works higher up in a bigger range. I just want to see a really good stable range. Uh, UN is my ticker. Please give me I just completed my calibration phase. Kieran goes over the Darwin review tomorrow, so if you're part of that, then we can go over your Darwin tomorrow. It's a really good exercise, and we can really dive deeper into it. So definitely join tomorrow, and we can dive into that. I won't be on here tomorrow, but Kieran will. So yeah, just put your ticker in tomorrow, and Kieran will give it a good analysis. He's very good at understanding all the tools where I've got like a set amount of what I use for what is important to me. I mean, we can see at the end of the session, depending on how much time we've got, whether we can have a little dive into it. But for now, we're gonna focus on getting the strategy built in front of you and looking at what we can do. The whole point of this session is just for you to guys to sort of learn a little bit. Like, sounds quite bad. I'm not going to give away all the secrets. Otherwise it's not good for me. But I can give away on how to go about building strategies or where to go about finding strategies. Um, these ones are very simple and basic, and I think the point that I'm trying to get at is the two strategies we've covered already over the past month. You could put in a portfolio and have a really good sort of portfolio as it is. So just trying to show you that if you follow a strict criteria and you put in the time, you can build some simple systems that the less things that you add to them, the more sort of robust they are. And then if they work in a bigger range in the stop loss as well as the take profit, then it's already a good start. If you think about it, I mean, this already does have a filter. That's why I don't want to do any optimization in terms of adding anything else. We've got the filters, the ADX value. The entry is the breakout. So you've got your entry model, you've got your filter. I don't want to add anything else to that. The only thing that I would maybe add, depending on what asset it is a moving average to sort of dictate the trend, the overall direction, because obviously you're using a volume, the ADX is more of a volume or volatility sort of measurement. Whereas it's good to use maybe both sometimes, depending on what the market is. But we're not going to do that today. We're just going to keep it as simple as possible. We're not going to over kind of go into it too much that I'm giving you too much to think about and you can't build robust systems. I don't want you to go into that. Oh, I need to add this. I need to add that. I need to, keep it as simple as possible. If we look at like that sort of system, we'll go back to there's 1, 2, 3, 4, 5, 6, 7, 8, 9. There's only 10 blocks on this system. It's very simple to build. Now, naturally, I would put a spread filter in here, just for like management sakes and protection. But I'm not too bothered when we're doing this sort of like strategy build. It's something I would do at the end. It's really good to also test like. Unfortunately, like the with FX Dreamer as well as with Perfectus, is there is no like sort of news filter. You need to build them yourself and you need to code them yourself. But some of them, it can sometimes really help a system. So, for example, one of my dollar yen strategies suffers badly on NFP day. So that system doesn't trade NFP because it gets butchered. But when I take out the results of NFP, which is, it's consistent, we know there's NFP every month. So it's a consistent sort of filter. I know I don't want to be involved in that. So, but there's some systems that's all I want to be involved in. So, it's good to sort of build a mixture of strategies that work both for and against what you're trying to filter out. And I think that's how it kind of counters each other out as well. Let's go back to this. So, yes, apologies, but this is taking a while to test. It's normally a bit faster than this. I mean, if you built this and tested on your own computers, you'd probably be faster tests than what I'm doing right now. But yeah, this is already looking pretty good. even on a 1 to 4, like this is looking pretty solid. So we're just going to give it a little bit more time, and we'll we'll test two different management styles today. We'll test the when we get to 2 hour, we'll put it to 1 hour for a trailing, but we'll also test like turtle management as well. So we'll test two different sort of trailing stops today, given we have enough time. Given it depends on how fast MetaTrader wants to do these tests, but we'll test two different ones, and between the two, whatever gives the sort of like best result, because we already know um, that we're going to get a good result here. But if it improves it, then that's even better. If it doesn't improve it, which will happen, like sometimes when you add managements, it worsens the results for the sort of total return, but it'll massively increase your win rate. It could decrease your drawdowns, and depending on how happy you are, like you could have a strategy that wins 30% of the time. There's no problems with that. Like, if you're happy losing 7 out of 10 trades. But if you're risking 1% and you're trading multiple ones of these strategies, if you do a Monte Carlo analysis on that, we're going to see massive swings in drawdowns, different variations, and these are the things that like the value at risk, the VAR system that Darwinex has, looks at, because what it's trying to do is make a predictable model on what to risk for the investor, if there is an investor, or what Darwinian wants to risk as well. So, understanding Monte Carlo and risk analysis is key, because if you if we randomize the sequence of this, let's say we put, hypothetically, all the drawdown could come at one time if the market does that. So it would take random sequences could take 80% of all the drawdowns, apply at one time, and that is a possible outcome. Like that is possible. Like right now, look at what we're seeing here. We're seeing a massive, massive drawdown, and if you just add a couple more losses onto this, like five, the drawdown's 5% more, which Monte Carlo will probably do. So actually, after this test, I'm going to download this and we're going to have a look at Quant Analyzer while we're testing one of the management styles, so I can show you what I mean. Um, the lower that you risk, the less sort of like volatility you'll see in Monte Carlo or confidence ratings. So it's one of the reasons that I do risk low, because even if we change the sequence, the drawdown's not massive like difference. It could be an extra 1%, so it's manageable. It's you don't get up and be like, oh, this isn't what my test is doing. You kind of just accept that that is your new equity drawdown low and go with it. If you're happy, like this is the way that I look at the system, right? If you're happy with double the drawdown and half the returns, it's tradable in my eyes. Like obviously we don't want it to do double the drawdown and half the returns, but even if like you looked out and be like, yeah, do you know what, that's actually not too bad, then I would say, okay, that's a strategy that you could run low risk, and it's great in a portfolio. So, excuse me. So we'll just wait for this test to be done. It's not far away, but as I suspected, I think we're going to get most of the return from the past 2 years. But the good thing is it worked well even before this past 2 years. This is it's going to be 8 years of history that we're going to be testing here. So good to say that this system works over the past 8 years. Obviously, the original system was based on, was it 6 hour bars? I think it was 6 hour bars, which I've never traded 6 hour bars before. So we didn't get the best results. It might be different using an ATR stop loss. Like it might actually work. The 6 hour bars, like I might test it in the background later on, once I've finished this live stream, just for something to do tonight. I know there's Champions League on, so I'll probably watch the Champions League, but maybe another night there's not football, and I'll probably have a little test around to see if the 6 hour works with the ATR, because I find that the ATR is very robust across a lot of different trading strategies. Percentage of price can be good, but I think you've definitely got to have like a sort of volatility metric in there to protect your percentage of price. Because, for example, if you had a 0.5% of price stop loss on gold, and if we take like a couple of months ago back, 0.5, even 2 weeks ago, was it 2 weeks, 3 weeks ago that we're seeing these crazy moves on silver and gold? A 0.5% move could happen in one tick 2, 3 weeks ago, whereas 5 years ago, a 0.5% move could take uh, half a day. So this is why I don't really use percentage of price for majority of the systems. Like I do have some on like currencies that I do percentage of price, but again, I have a volatility metric. So if the ATR of the past, 20 days is above the ATR of the past 30, or not even that, like I can't remember the sort of exact rule, but basically I'm measuring the ATR right now against the ATR say 50 days ago, and if we're seeing a massive jump, then it will not trade with a percentage of price. It would maybe switch the management to something like an ATR, just so it's going in sync with the market. I think that's quite important, that especially with percentage of price, you're not getting caught in, you're taking unnecessary losses sometimes with percentage of price. It's still a really good management style for like a stop loss for the most part, but sometimes it's just not great. Okay, so looking at the results, we got 150% return with a 12.78% drawdown, maximal equity 15. Okay, and profit factor is already 2, which is massive. That is really good. Only 150 trades, so not too many trades. But it's fine because it's on the daily time frame. This is still okay for me. 58 trades short with a 27.5% 9 win rate. So that is borderline. Is that borderline? Yeah, so it's just profitable at 1 to 4. Just profitable at 1 to 4. We can have a look at the equity curve on Core Analyzer, but 90 trades, 40. So 40% of the time at a 1 to 4, we're hitting target, that's massive. It's absolutely massive. So yeah, maybe if we look at where the trades are happening, maybe we would apply a moving average to sort of make sure we're not getting in too many shorts when we've been in a clear bull market the past couple of years. But for the sake of this, we've still got pretty good. So I'm just going to quickly save this. So we'll do gold. That's fine. And then we're going to go back to this. So we're going to go back to FX and we're going to apply management. And I'm just going to apply this one. So the reason I have this is just so I can copy and paste, because there's no problems with copy and pasting on FX I found. So I'm going to have a look at each position. So each position, am I going to do that way? I don't think I'm going to do that one. I have a different one. Yeah, this is the one that I did. Was that there actually? Let me have a look. Yeah, it's this one. Apologies. Yes, this is the one that I normally use. So we're basically saying pass, so then this runs like every time there's a tick. If there's a trade, for each trade, we're looking at pips away from open price. So I'm going to do percentage of current stop loss. So 200%. So 200% means 2 times the stop loss. So that is, a 2 to 1 once per trade, because we don't want to do it every single time. We're going to do a modify stop, and we're going to put it to minus 100% in the stop loss. So what that means is it then pushes it like 100% in the, so like it's like a 1 to 1. So we're going to do that. We're going to run this test, and let's see. Call it TR1, trailing 1. And going to run that in the background. So 2.25 ATR with a 400 take profit. Cool. Oh, no, not 205, 2.25. Don't worry about that, don't worry about that. Cool. We'll just let this run in the background now. So, right. Sorry, 2 seconds. I'm just going to delete these because this is just what I'm working on right now for another portfolio. Right. All right, okay. So I'm not going to be too worried about singular days as it is right now. Just not got enough trades to sort of say we're not going to trade Wednesday. You could, if we get more data, because I don't think we'll have. It would be like 5 days or something like that. So long side looking not bad. Short side, yeah. So short side still not bad. Like if we can manage this accordingly, then this is not bad. This is pretty good. And then long versus short. Like that is pretty steady. So what I want to do is really good to see that we're probably for a year, which is quite crazy. Yeah, that is pretty crazy. That's a really good start for a system. So if anyone wants a free system, go build it. I showed the link yesterday. You can build this and apply it if you wanted to. Obviously, it's not a recommendation to say you'll make money. This is just for education or whatever I have to say the disclaimer wise. You know what it's like. So what I'm going to do now is I'm going to run. Okay, that was quick. Yeah, that's why it didn't work. Sorry, 2 secs. Sometimes you can have array out of range or something like that. Let me just make sure that this is going to work in the background before we have a look at Monte Carlo analysis. So just bear with me. Are we going to work? Are we going to work? Okay, we are going to work. Let me just see if the management actually works. It's really taking its time. Two stop losses, great start. So wouldn't it be because it's only one? So do we see it? Yeah, so we can see there's our 1R. So we've moved 2R in profit. We've moved it to 1R. So that's what these are. So we'll just let this run in the background. We'll go over Quant Analyzer. So what I'm going to do is I'm going to run 100 different sort of simulations. Now this could, yeah, there we go. Okay. So what we're seeing here is Monte Carlo analysis, and what it is, if this works, is it's showing us totally different equity curves that could have happened in the sequence of trades that we had. Now you could run 1,000 of these again, and you'll get completely different results. So I normally run a couple of hundreds, so I can run another one. And again, look, we see a different chart, see a different chart, see a different chart, see a different chart, see a different chart. So, you know, it shows you how random trading is and how random the strategy is as well. Because again, we're seeing totally different incomes every single time we run a simulation. So normally what I do is run 1,000 simulations, and I would say 1,000, I'm okay. The more trades that you have, the more differentials you can have here. So we've not got a lot of trades, so that's why we're not getting massive differences. We've not got enough trades for there to be massive differences in sequence. So can you check historical data so quickly in the software for real? Well, so You can download the within a Darwinex account in your MetaTrader. You can get the tick data. Now, depending on what type of strategy you run, depending on your stop loss size, there's a lot of variables for running every tick. If you're using small stop losses and you're relying on certain things, you need every tick with real ticks. For that, I use Quant Data Management or I use Tick Data Suite. So those two softwares are really good for giving you high quality tick data, and that's what I use if I'm going really like in depth. But for the most part, depending on like what I think is a small stop loss is like a 1 hour ATR or less. So for me, anything like smaller than that is a small stop loss for me. So I would use every tick based on real ticks because the smaller the stop loss, the more sensitive your system will be to slippage or spread or all the things that can make a strategy underperform or not work in certain environments. So that's why I tend to use bigger stop losses because essentially the bigger your stop loss, the less effect slippage and spread has. Less commission you pay as well because your sizing will be smaller. Obviously, sometimes like it means the less return, but I'm quite happy running these bigger stop loss systems. For years they've worked for me, and it means that I'm not getting chopped in 5 minutes. You'll sometimes see a fake out and then it goes in the direction. So that's why I don't mind a bigger stop loss. Yeah, you can be in a trade and it goes up and down a long times. It's just how it is. But yeah, for software, depending on what you're building, it's fine. It's fine. I've never had anything that's deviated much away from every tick. But that's because of the way that I build systems. So yeah, depends on what you're building. That's the unfortunate answer. I cannot give you yet 100% rely on it because market's always going to be slightly different to a testing environment. Like in a time where there might be not enough liquidity, the testing will still take the trades. So that's why you will see differences in your live trading to your back test. But the whole point is like every tick based on real tick will give you probably as close to a sort of result in real time as possible. Um, but yeah, for the most part, depends on when your systems trade. If your systems trade around news, then your back test will could be very different to your live as well. So yeah, but yeah, basically what we're seeing here is Monte Carlo analysis. Okay, and for my strategy, I have to check historically data, like what this strategy have been doing in the past year. But it takes a lot of time. Yeah, it can take a lot of time. Depends. Like, I mean, how many trades are you taking with that singular strategy? I suppose that's the thing. Like, with MetaTrader, it can take a while to do certain tests. But I normally do quarterly reviews, unless something is sticking out like a sore thumb. So if like I check my metrics on my FX book all the time, so I'm keeping up to date with 4 to 15 months. Yes, it's going to take a little bit more time to like do a test. Naturally, for 3 4 months, like you've just seen, it took 30 minutes to basically do 180 trades for over 8 years. So it just depends. But yeah, I'll look at my MyFX book to make sure that my strategies, and what I do is all the EAs that I have on my live, they all have magic numbers, and I filter out on my FX book by magic number. So then I can keep an eye on to see the underlying strategies: drawdown, return, stagnation period. So that's the main metrics that I'm looking at. Only recently I've started looking at sort of long versus short because I've now got a lot more data to kind of look at and make a good judgment decision. But what I'll do is I'll be like, okay, the short side didn't work for the past 2 years on this asset. How does that hold up against the past 8 years? Now, on certain things, it's going to hold up. But what I don't want to do is only trade that one side of the market because we know markets could change. We could be in a bullish trend for 8 years and then go in bearish for like 2 years. And the worst thing that I want to do is take trades when we're in a clear trend to the downside, So what I would do for that is, like, what I've done for one of the strategies is simply just apply 200 moving average and said, we're above, we're buying, when we're below, we're selling. And somehow, that, like, as much as the result was already good, it's a case of what could improve it without actually sort of over optimizing. And I didn't optimize the length. I just put in a simple, institutional sort of bias that they would use for defining a trend is up or down. Okay, so going back to this, we can see that the net profit is $156,000, so 156%, with a 12.77% drawdown. Now, we can see with the random results that in a different sequence, 95% of the time, basically, or most of the time, we're seeing an average drawdown of 17% with only 136% return. So for, like, my sort of, like, if I have a strategy, and the way that I would remove it from my sort of portfolio is if it exceeds this 95% region. So if I was trading the strategy live, if it went beyond 17.1%, then I'd be looking at, okay, this is maybe not holding up as edge as much, because we're seeing a 5% match drawdown more. The match drawdown is here. But yeah, so this is more crucial when you're risking higher. So 1% per trade, every extra trade it takes, it's losing you a lot more money than, my systems. It's 0.05% per trade or 0.1% per trade. So the difference between this and this is minimal. So it means that if it goes beyond this, even if I took 10 more trades, I've only lost half a percent or 1% more. But I do have my own way of defining it. It's hard to explain because everyone will be different. And there is no sort of right or wrong way of doing it. It's just, I think that's the most interesting part. Like, I can say do it this way, someone else will say do it another way. You've got to kind of make it yourself what you think is the cutoff point. But what I do is, if I've had two strategies over the past 4 years that I don't trade anymore, but I put them into a sort of forward testing bias to see, is this new equity lows, is this new stagnation period, and does the strategy still work? One of them, again, it was just a new stagnation period and a new equity low, but it's broke out of its high watermark. So I started trading it not too long ago, not on the portfolio, but on another account. And that's what I kind of do for rotations in terms of keeping track of some of them. But yeah, we can see that the risk. This is one of the most. I know we don't get a great idea here, but this gives us, like, the sort of expectation for risk or ruin. So actually, that doesn't do too well. So if we used $100 account, risk or ruin probability. I've never really used this metric too much because I don't really need to because of how low risk, but it would be much better. Yeah, so it's basically saying because the drawdown's so low, the risk of ruin's almost zero. But if you had a 40% drawdown, the risk of ruin would probably be at 100%. So we don't need to worry too much about this metric. I was just wanting to kind of show, like, Monte Carlo analysis here, and this is, like, one of the most ways that the VAR sort of, like, uses a sort of Monte Carlo sort of base analysis. It's predicting the next sort of move. So, like, we can see that this is, predicting that highs at 220,000 from here, or lows of like 150,000. So it's a $60,000 range, which is a decent amount of volatility. Where if I used my low risk approach, this would be, like, so tiny. And this is kind of what, like, your risk of ruin or your VAR sort of scores are based on in terms of, like, your multipliers. So it's using, like, annualized volatility, essentially, in a way. I mean, from my understanding and what I've read, what I've seen from being a user of Darwinex, that's the best way that I can sort of describe it. So the more that you can kind of keep this squeezed in, the more, like, your multiplier will increase. So the way that you go about that is obviously decreasing how much you're risking, or your trade frequency, or anything that makes this smoother is essential. Anything that can make this smoother without massive drawdowns, massive peaks, So you kind of squeeze both sides. So you don't have as big a wins, but you have nowhere near as big a losses. Kind of smooths this out. Okay, let's see what we're doing here. Okay, so we're almost done here, and we can already see that the returns are not going to be as good. I kind of did expect this. It's just what happens with management strategies. But I'd be interested to see how the win rate holds up. So that could be quite interesting. I reckon it's probably moved up to something like 40% on the short side, maybe 50% on the long side. So that's kind of a 40 over 45 to 50% win rate is what I'm expecting here, roughly. Um, so we'll kind of have a look until this is done. It's kind of taking its time though. It's clearly done, but it's not wanting to go. Oh, come on, MetaTrader. There we go. All right, okay, so yeah, so it's a little lower than what I thought. I thought it'd be 45 to 50. It's 43.48%. So long side is moved up 7%, short side's moved up 10%. So profit factors massively went down, returns went down, but drawdown has almost half. So that is good, but the returns have almost half as well. So the trade off is not as big as what we'd think. I mean, of course, it's like it's really good return to drawdown. Like I'm quite happy with that. I'm going to download this one, and then we can see what the report is like. Gold Trail. So we'll keep it like that, and then we'll have a look. And then what we're going to do is just test another bit of management. So test another bit of management. So we're going to use this one, turtle management. Turn that off. And then essentially what this is doing is we're going to trail it. So we're probably going to run it. Let's do every 4 hours. Let's do it every 4 hours. So every 4 hours it will have a look. And we can trail, so we'll call it, we'll just call it level just so we don't need to change it. Let's put 1. So if we put level 1, basically, as soon as the lowest price is above the open price, so what that means, as soon as we're in profit and the lowest price of the past bar is above that, it will trail it. So every bar that's in profit, it will trail. So this would be a very tight management, but you could also make it very loose as well. So you can optimize this. So you could use 10 bars. So every bar, if the lowest price of the 10th bar is there, then it would trail. So that's essentially what these things. This is just a trail and stop loss. So I'm just going to do this if I can. So we're going to call it tier 2. And we'll see how this performs. And then we can have a look at the quant analyzer for the other system. So again, run 400, 2.25 level. Let's do, let me have a quick look. I'm just going to sort of guesstimate here because there's no right or wrong way. So we can see that that's done there. 1, 2, 3, okay. 1, 2, 3, so that would trail there, okay. Okay, yeah. Yeah, okay, so the short side is losing pretty quickly. Okay. Let's just do something like to, this is where I would like maybe optimize it and just kind of see where the best region is, but we're not going to have enough time to sort of do that today. So if this gives a better result than the last one, then what I'm going to do is I'm going to optimize it, and then whatever best result I get, I'm going to apply to the Darwinex charity. And on Tuesday next week, what I'll do is I'll quickly go over the sort of changes that I've made, the sort of like to see if it's improved it, if it's not, and the final result as to what we're putting on the Darwin. Now, I won't be risking 1%. I'll be risking 0.1%, so the results are not going to be 150% return to like a 12% drawdown. It'll probably be more like 10% return to, or not even 10, probably 8% return with a less than 1% drawdown. So that's the sort of thing that will probably end up being, which is really good in terms of like portfolio sort of like regions. So I'll be happy with that. So now let's kind of have a look and compare. Gold, what did I put it as? Oh, yeah, there we go, trail. Right, let's have a quick look. So again, all years are profitable, compare apples to apples. So yeah, you can see massive differences. So again, like this is something. So the stagnation period before was 403 days, meaning that it went over a year without making money. Where now this is just less than a year. So the stagnation period has decreased, which is always good because it means that it's better from a recovery ratio. So like what I try and do in my portfolio is build the recovery to something like 90 to 100 days because I see that as healthy. So meaning that it should take between, after a deep drawdown, I'll take between 90 and 100 days to sort of like go back to all-time highs. It's very hard to sort of build something less than that. Now, don't get me wrong, it's probably possible. I've just not been able to achieve it yet. So I hope to get there. We'll see. All things, all good things take time. So we can see how that gets on. But again, we can see Wednesday's still pretty poor. Wednesday's poor for both days. So this is quite interesting. If I had more data, then I'd make the conclusion of Wednesdays. Unless, let's just see what Wednesdays look like. So it could just be all in 1 year, which if it's all in 1 year is a freak, but if it's every year, then maybe that's something that we can look at. Okay, whoops, no. I meant to only select Wednesday. Right. Okay, so long versus short. So it was originally profitable, then it wasn't. So one positive year is all we got. So maybe it is right to say Wednesdays is not good, but again, we're only basing this on 25 trades, which is just not enough trades to make the assumption. For me personally, this is it is it is affecting the overall drawdown because if you move Wednesdays, then you've only got a 6.4% return of 100%. 6.4% drawdown with 100% return, which looks good. And I think this is where you can go down the over optimization trap because you might be like, oh yeah, now it looks good, and then you can build that perfect looking portfolio. The question is Wednesdays now going to start performing and the other days are going to not perform, or these are things that you can make assumptions on if you've got about 1,000 trades or a couple hundred trades on a singular day. You could use other strategies that you've built on that asset to kind of clarify it, as long as the strategy is not the same sort of methodology. But then that's kind of a different realm in itself. So just going to remove that for now. Okay. No. Don't want that one either. Okay, so again, gonna run Monte Carlo analysis. Let's see what we get. So returns against drawdowns is even worse. So 7.5% returns max. Now it's 16. So it's already increased quite a bit. What was that different to that time? Okay, so 18.5. So adding the management actually probably increased the max sort of returns, like drawdowns. But we can see every test that we run, we get a different max drawdown, a different sort of like 95% rating. Oh, sorry, I think something was not working there. So it's hard to sort of compare like the things, but if you can see that we've not got much difference here, so this is not something that I'm too bothered about. But it'd be good to actually maybe do like a low risk system and compare like your sort of like um, max drawdown to return, and you'll see that it's very minimal. Like this is quite a big difference. Is it? That one's not too bad. But you could keep running these different simulations, and you're going to get different max drawdowns, different confidence ratings every time, and it's all going to give different sort of reports. So it'd be interesting to see if they give you one that's really, yeah. So that one's quite crazy. Let's see what. Yeah, still going to make the same return overall, roughly. So that went almost. What's that? 94 trades. 94 trades without profit. You know that is possible in sequence. That's the thing. It's very important to understand. Sequences of trading, and that'll it shows you how like random this can work. And I think that's very important to understand. Going back to this, let's have a look. I don't think this is working. Is it? Once per bar, 4 hour. Hmm. That's why. My bad. I'm going to have to run this test again. I didn't pay attention to this and this. So it's only going to trail it 2 days after, which is not going to work. Shows you that you just need to pay attention to sometimes just the small details in these things, which unfortunately I never did. It's not very good of me. Right, let's run it like this. And we'll run this test, and then that will be us today. And then what I'll do is I'll go test everything, and then on Monday we'll give a sort of update on that. So yeah, if anyone has any questions for anything that was being covered today, or anything that particularly you'd maybe want in a live session going forward, just definitely always open to suggestions as well, because I'm just doing what I think is good for education wise for people that are just entering the sort of space of algorithms and these sort of things. So feedback would always be appreciated. I don't care if it's negative, positive. It's how we learn. So we'll just let this run. Hopefully it works. Meantime, let's have a quick look at the market again. Let's see if we've got any movement on anything else. Okay, dollar yen's moving in the right position. I'm happy with that. Pound yen. Move that trade. Okay. Euro dollar. seems like we're starting to get a little bit dried out in terms of volatility. Gold's moving quite nice today, actually. And then silver again, 5%. So be interesting to see what happens over the next couple of months, because historically, between December, January, February, that's when we see the most sort of increase in gold. And then as we move into like the rest of the year, especially around that like summertime, historically seasonality, we don't see as big a push in gold. So be interested to see what happens over this next year. Like we could easily just get it could easily just flatten out a little bit, like 2020, like we've seen that massive push up, and then we kind of just play within this range. Could easily happen. Again, who knows? We could replicate 2011, see this massive push, and then just play around here and then start coming off a little bit again. So interesting to see what happens with gold. Obviously, I'm not too fussed what way gold kind of goes. I'll trade it in either direction. So good listening to you, bro. Thank you. Appreciate it, and just hopefully, I'm giving some sort of value. As I say, I'm not exactly an educator or anything like that, and nor do I kind of want to be. I'm just happy to just speak and let you guys sort of follow along as I'm doing certain things. And yeah, hopefully everyone else can level up. Let's have a look. FTSE starting to exhaust a bit, but it makes sense as we're coming into the end of London. Yeah, that's London basically shutting, so can expect to see some sort of pullback as sell-offs happen. Nasdaq not seen that much of a fall through in the past hour. Let's take a look at cryptos. Geez, that is a flat day for Ethereum. Has it even moved? Yeah, really flat. Let's take a look at Bitcoin, see if we've got much difference. Yeah, quite flat again. Interesting to see where this goes next. We're at 67,000, so we're 50% decline from the top already. So interesting to see where we go with this. Play up here. Yeah, below that EMA now. So like even just looking at it, we're starting to fall. So it'd be good to see some sort of consolidation. Let this EMA pull back, and then I might start dollar cost averaging back in or something like that. I'm not the biggest person in crypto. I don't understand a lot. Like it's not a case of I'm just not sold and just trying to learn too much about it. I'm happy just dollar cost averaging into certain things is like the diversification for portfolios. My sort of thing is to just do trading as such. I have built systems on like crypto and they do work. It's just a case of unfortunately here in the UK you can't like in a regulated sort of brokerage trade it. I know we've got the CFD one, and I know we've got the one in Darwinex zero, but the leverage is only 1-to-1. So if I was wanting to build a portfolio on it, it might not be the best idea. So maybe later down the line, as things change, I might be able to trade it. But for now, I'm just going to have to stick with what I know. All right, okay. So obviously, we've applied different management to this. So we're every 8 hours essentially. So every 2 4-hour candle, we're trailing it to the low if we're in profit, and that's why we can see that. If we think about the first curve, we see massive spike. It was either a 1-to-4 or it was a loss. It's big win or small loss, which is totally fine if you can trade that sort of thing. Where this is, you're going to see tiny losses, tiny wins, big wins. The good thing is you're not going to see big losses. I think that's the good thing with this sort of like system. And obviously, we could. Nice live, got to go now. Thanks for joining me. Appreciate it. So yeah, it's always interesting to see different. Managements is where you could apply anything and you could never get a good result, is what the original done. That can't happen. Trust me. Like the best sort of return to drawdown might be the 1-to-4. But again, all comes down to the trader at the end of the day. Like if you can happily trade 1 to 4, uh, by all means, do it. But just accept that over what 190 trades, you're going to lose 6 out of the 4, which is pretty good. But then that's being quite biased to sort of being in like a bullish sort of condition. So are we going to see that going forward? I mean, yeah, we could, because obviously gold is an appreciating asset long term. That's why the sort of long side works well on gold. That's why we've seen the results we'd have on here. So yeah, but for the charity Darwin, I want to get some sort of management system that works on this. So that last management system kind of looked not too bad, but maybe we're trailing it too tight when we're at 1 to 2 and we didn't give it enough like sort of breathing room for it to get the legs that the system clearly had. This one is definitely going to cut it short, but my guess is the drawdown is going to be pretty tiny. So I'm interested to see where this finishes up. It could take a bit long for today though, but we'll see. What time is it? 5:15. Okay, we'll go till 5:30, and hopefully this will be done by 5:30. And then if it's not, then I'll have to call it a day because I've got a few other things I need to do. If everyone's wondering, like, don't copy these signals at the bottom here or for that. This is just purely my like testing account that I like try loads of different strategies on going forward. So these are not like actual strategies I trade live in terms of my own capital. This is just a test Darwinex account that I have, just to sort of like test some of the theories before actually moving them into live environments, which I think is a really good idea. But yeah, it allows me to sort of see if they're still robust, even applying certain things. It's also like what I'm doing with a lot of these things as well is I'm really testing the waters is what is over optimization and what isn't. I really want to see how far I can push certain things and they still work. Because it's kind of interesting to me to see what is where is the tipping point in over optimization, where because there isn't a defined like what is over optimization, what is adding too much. We just know that if you go 4 or 5 deep in terms of indicators, it's more than likely too much. But what I'm trying to do is kind of test the waters. What is too much? It's just a little kind of side project, interesting sort of thing that I'm doing. And I don't think I'll get an answer to that. I think we're going to see a mixed bag. And I think that's going to be my conclusion. Because there's some strategies that clearly are working. So, if I was to go into this, so today we've had oil, 2 DAX trades, and a dollar yen trade, and we're still in a dollar yen. So we're going to be positive for today. But if I was to go back to the last 3 months, I think what I'm trying to test out here is like Nasdaq. Nasdaq's been one of my worst strategies, and it kind of backs up the bias of sort of volatility's not been there. So we're down a whole percent on that. S&P, I think we're about break even. Yeah. So unfortunately, this one was a mistake. Yeah, I accidentally put 0.5 instead of 0.05. So, yeah, that's why that's that. So technically, it would be up overall. It's just not at the moment. What else would trust? Oil is a bit of a mixed bag. Like it's not doing too bad. It's not the best, but it's not the worst at the same time. Silver's been good naturally. Yen only got £1 yen. Eurodollar, 3 trades, 3 wins, not too bad at the moment. Aussie yen up on that as well. Do we have much trades? Yeah. I removed gold because I trade gold a lot in my normal portfolio and I wanted to kind of see how does this portfolio perform without trading gold, which is interesting. Pound yen up. So I think dollar yen again. I'm testing so many systems, so Darwinex only up 600 odd. So what's holding this portfolio back is literally the Nasdaq, as well as one of those trades on the S&P 500. But the rest of it is doing not too bad. This is more of like a sort of like forward sort of an like testing one. So if what I'm doing per strategy is testing it for the stagnation period. So if like the stagnation period of each strategy is like 200-300 days, I'm gonna forward test for 200-300 days. If it makes profit, then I would then look at the statistics and then maybe look at moving it into the live environment. But that's the good thing. Like once you get to the point where you've got a portfolio and you've got a second one that you can do testing on, you're in no rush to sort of get these things live straight away. And this is on like Darwinex Zero, so if it does well, it will naturally make a return anyway. So if not, inexpensive sort of testing ground for myself. That's the way that I treat it. So we're seeing that this tight trail is really probably going to make this underperform compared to the 1 to 4, but this looks a lot smoother overall at the moment. So again, it just depends on what you want to trade. Another way that I look at things is splitting the risk. So I might do 0.5% 1 to 1, 0.5% 1 to 4. So essentially, what you've done is, if it hits the 1 to 1, you've already covered the drawdown of that trade, so it's break even. That's another way of management, rather than actually applying something that trails. So you could actually split the trade up into like 5 segments. You could go for 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5. So then you're actually capturing all the move, but you're kind of scaling out. Again, you could just take partials at some points as well. These are all methods that do work, and some work better than others depending on what you're trading. So that sort of management might actually work really well with this sort of strategy where we're going for the bigger targets. It's clear that the trailing is kind of hindering it a little bit in terms of returns. So splitting the risk amongst different sort of position sizing and different take profit levels could actually smoothen this out and get a really good return. Another way of doing it as well that I have for one of my strategies is I have one that's like a smaller ATR stop loss. So let's say like it's a 2 hour times 1 hour, two times 1 hour ATR. The other one could be a 2 times 4 hour ATR. So what I'm doing is I'm capturing the smaller move, but also the overall bigger move. So we're not sort of being exposed to just that sort of intraday move. We're exposing ourselves to the longer term move as well. So I've just waffled on there. I can just speak trading for ages. Just loads of different things that I test, theories that I test. That's the beauty of it. You're never going to run out of ideas. Never. Uh, so yeah, I think that's what to me it kind of like the testing environment just feels like a sandbox, like almost like a game as such. Like you're constantly building and testing, trying to beat something. Um, you know, I don't get excited by like seeing a result like this. I get more excited if I like try and throw so much things at it and it's still like standing essentially. What you want is a strategy to be like, if you put it like a boxer's like boxing into it and it's still standing at the end of the round, that's the sort of like thing that you want to see when you're building and developing strategies. You want to throw everything possible at it, and if it's still standing, you've potentially got something there to work. Be interested to see total return drawdown as well as the win rating. This is going to be so much higher. Like we can already tell, it's probably going to be about 55%. That's what I'm going to just by looking at it's about 55%. So just a couple of minutes. We'll go over the results, and then that'll be it for today. And what I'll do is probably do a little bit of working over the weekend, most likely. Come up with like a final sort of like piece in terms of what's going to go into the charity Darwin, and then I'll share it on Tuesday. Okay, so 67% return with a 5% drawdown. So that's still not bad. 1.63% profit factor. All right, okay. Interesting. The short side has really started to do better in terms of. So the short side won more than the long side with this management, which is very interesting, considering the short side was struggling. So, yeah, this is interesting that we have actually hindered the long side, which is where all the results came from, but we've really helped the short side here. So, again, this is what I'm trying to test as well: is could I apply one management style for the short side? Could I apply one management style for the long side? Will that improve it? That's an interesting thing that we could delve into. We could probably do that for this charity Darwin, and then see how it is in a year's time. But then again, 71 trades, is it enough to base on? Maybe not, maybe not. But what looks interesting is before Wednesday wasn't profitable, where now Wednesday is the most profitable. Let's just double check that, because that seems weird. Just before, easy to identify. I don't know what that was on about then. Now Wednesday and Thursday are now not profitable. Friday is really profitable. So interesting that anything we throw at Wednesday just doesn't work or help it. Short side's been helped though. Is it in return though? 36 to what was it originally? 3.6 to 1, where this is now 6 to 3 to 1. So not really. It's helped the drawdown, but not really helped the actual return to drawdown ratio. So yeah, maybe this has not been the most successful. So we've increased the win rate by quite a bit, but decreased profit. So yeah, what I'm going to be trying over the weekend is splitting the risk between 1 to 1, 1 to 2, 1 to 4, and see if we can actually maybe build something that could be worthwhile to put on the charity Darwin. But yeah, so that's my plan, and that's my plan going into next Tuesday. So what I'll do is I'll cover that next Tuesday. What worked, what didn't work, compare. I'll keep these reports in here, so then we can keep comparing back to what we've tested on Tuesday. So I'll keep these reports in here, and then we can keep falling back to these. What I'm going to do is I'm going to change the trailing stop to something like, I don't know, 4, 5. See if we get much difference, but if we don't, then I'll definitely look at management. But anyway, just want to say thank you very much for joining me for the stream today. That's going to be me calling it a day. Hope you have a good rest tonight, and yeah, we'll see you next Tuesday. Okay.